Well, Mayuresh Joshi is also joining us, a fund manager from Angel Broking here. Mayuresh, good morning and welcome to the show. First up, at present, looking at the markets, perhaps what are the thoughts coming to you? Are the markets looking ripe for a good June series? May series again was a mixed, was a volatile series. We saw the dips, we saw the comeback. And now again we are trading almost around 10,500, 600. How's the expiry looking to you, and how's basically the June series is shaping up in terms of strategic direction here?
Morning, Piyush. No, clearly I think with a lot of developments happening on the macro scale on a global setup, we are probably seeing a lot of volatility probably still continuing for the markets. The kind of reaction that you're probably seeing today in terms of some amount of compromise reached between the Italian political parties is having a positive rub-off effect in terms of risks on asset classes like equities. And again, that same exuberance has probably been seen by the bond markets as well in today's trade. So I think the volatility from immediate near-term perspective can very well continue, not just for the Indian markets, for the global markets as well. So I think it's to the best judgment that one probably should probably have a stock-specific approach in this market, a bottom-up approach, follow probably valuations where valuations are not expensive, and again probably look at sectors where there is strong earnings momentum expected to continue on the base of what we've seen Q4 results being delivered. So I think it's a stock-specific approach for me. For the markets as a whole, I think it's a broad range that I have been defining. I think that broad range within which the markets will trade or gyrate will very well continue over the next few months.
With Mayuresh, we agree it's a stock-specific market, and I want to talk to you about a few earnings as well. We saw ONGC's reporting. Numbers are below what the street was expecting. Operationally, they've not had much of a quarter to talk about. But the markets are clearly giving this one a thumbs up. I guess it's directly correlated to where crude prices are headed. 2.5% higher in ONGC despite weak numbers. What is the outlook on the counter, assuming that I think they sort of use crude at $53 a barrel? That's what they're using for calculation's sake. So from where we stand, are you constructive on ONGC?
So morning, Samin. I know largely again I think the stock in my opinion again is broadly defined in the range as well. In terms of numbers itself, yes, the realizations of $66.51 a barrel directly seeps into the bottom line because there is no subsidy sharing or under recoveries that they have to probably bear. The second element in terms of higher OPEX and higher costs are probably weighed onto their margins. But the third aspect, again, I think if you look at ex-HPCL numbers and including HPCL numbers, obviously I think the earnings probably looking a little bit softer ex-HPCL. What they probably got as an entity, including HPCL, is a mix in terms of both downstream as well as upstream operations that they probably run on their standalone business. OVL probably with the hindsight of larger and higher crude prices did report a stronger set of numbers as well. But what probably happens if crude still sustains its upward trajectory, I think that is where the concerns will lie. Once I think that $70 mark is breached, and if it does manage to sustain at higher levels for global macro conditions notwithstanding, you're probably going to see some amount of pressure coming in either from the fiscal side where ONGC might need to bear. So I think that is a big overhang onto the stock, and that is a precise premise that we have built into our earnings estimates for which the stock might just probably move in a range.
Right.
Mayuresh, I know you track some of these power companies very, very closely. Three names for you that have seen traction recently: Power Grid and of course REC and PFC. Do you see a case for getting into these names, especially in the light of their Q4 earnings and of course with some kind of a revival that's going on in the power sector?
No, so I would not term the Pancho a revival. I think there is still some evident stress which is clear in the power sector as a whole. So I think the entire power chain, if you look at it in terms of transmission, distribution and the EPC activities around the power segment, I think you are having selective plays which can do well from an earnings perspective over the next 1.5 to 2 years. Out of the names that you mentioned, Power Grid, I think with the strong capitalization and the capex that the management is putting forth. The capitalization to capex ratio should stay above 1. You're probably looking at the transmission lines actually having a huge say in terms of the earnings profile. And even in terms of the regulated ROEs, I think the regulated ROEs should show an improved traction going ahead as well. So to that bit again, I think as an investment play, Power Grid is something that I would still continue to like on declines. For PFC and REC, again, I think the provisioning that they have probably been doing, I think as per norm and as per requirements, I think that has impacted their balance sheets significantly. The private exposure, though I think around 14-15% respectively of their overall advances size and the kind of recognition that they've done on this part of the book, I think there has to be a clear revival happening on all aspects of their key business verticals, both in terms of tariff revisions, which the management is probably alluding to, with larger pass-through happening, and the other element in terms of the provisioning actually starting to come down in terms of the asset quality pressures alleviating. So from a price to book perspective, PFC, REC look very, very attractive, but I think when to enter is the key point. So my own sense is that there might be better entry points for PFC, REC over the next few months, but Power Grid on declines is still something that I'll continue to prefer out of the names that you've alluded to.
Those are some ideas that you can keep in mind. Mayuresh, Gaurav, Amit as well as Himen, thanks so much for joining us this morning, running us through your reading of the markets. Below 10,650 right now on the index, good support coming in from an HDFC Bank, but the